Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor.
Let's go.
All right, welcome to another episode of Future Money, where we talk about the technologies of the future
that will make us money.
Once again, this is Ayal, managing partner of Gerber Kawasaki.
And Hatem.
And Hatem, what the fuck just happened?
Can we swear on this podcast?
I just did, so I guess so.
Yeah, what the F? I don't know. May 5th, 2022.
Cinco de Mayo.
Yeah, Cinco de Mayo. Market is down 5% on the NASDAQ and 4% the S&P. Worst day since March 2020.
Since March of 2020. We're now at the worst start to the year in over 80 years.
Yeah.
Does it feel to you like we're in the worst times that we've ever been in?
Definitely doesn't feel that way. I went to dinner last night and literally every table in the restaurant was full.
This is the great disconnect that we've had, and a lot of it is, we'll get into more of the technicals later, but like the economy is looking good, things are looking good, like everywhere I go, much like you, everything's packed, people are doing things.
Have you tried to I'm trying to go on vacation this summer, and the plane tickets are insane.
And if you wait like a week, the cost like doubles. It's crazy. So there's a lot of stuff to talk about, and obviously this has been a challenging start to the year, but what this show is about, right? It's called Future Money. So I really kind of want to emphasize that for people who are listening, is this is about the future. Right now we're in the present, and sometimes the present can suck.
And we're drinking Modelo.
We're not getting a sponsorship for this, just FYI. If Modelo does want to reach out to us to sponsor us, we'll be very happy.
Now, the reason I'm drinking is my very wise wife said, in times like this, the only thing that you can control is your blood alcohol level, which is true.
Can't control the markets. You can only control your blood alcohol. And it's after market hours, everybody, so don't worry. Everything's good.
And obviously, we don't want people to drink and drive, so please, don't do that.
We're not in a real Tesla, right? We're not really driving this car.
No, but panic. I think that's what we're seeing right now. We're seeing an emotional panic that is happening. People are selling everything and anything. Today I think Apple was down 6 or 7%. Microsoft, some of the highest quality companies were down huge.
And this is what happens. This is what we not so affectionately call capitulation moments in the markets, where it really doesn't matter what you own. The market is just not having it.
Right. And again, you have to understand that macro will always supersede the micro. So when everyone is panicking because interest rates went up, or geopolitical stuff that's going on around the world, or China locking up, it doesn't matter how good the company is, it's just going to go down, right?
And absolutely.
And that's also an opportunity for you, right? Like that's when a dislocation happened, and that's what good investors look for. That's what Warren Buffett looks for, right?
For sure. And Hatem, you've been doing this, I think, when did you start? 05, 06?
I'm so glad you asked this, because I was thinking about this last night. I was born into a bear market. I got licensed in November of 2006.
So that was pretty bad timing.
So I had a good 6 months, and then the financial crisis happened. And I was working for AIG at the time, which has lost $50 billion in 1 week.
Yikes. That's like a random day in a tech stock, but
it really is random day on a tech stock. 100%. So let's start with talking about corrections versus bear market.
Well, real quick, the reason I asked that, Hatem, is right, you were born into this bear market. We had it in 2007, 2008. Then we had it in 2011. Then we had it in 2014 and so we had it in 2018 and 2020. And every time, when we look after the fact, we always have the same phrase that we ourselves, as well as our clients, will always say the same thing. Oh man, I wish I had bought more when that happened. I wish I had, had the courage or had the money or had the whatever to pick these companies up.
Well, I think that's the benefit of experience. Right? you know, it's someone said experience is, I'll remember this. I really want to remember this quote because it's a really good one. But I remember buying Apple at $8 a share in 2009.
That's pretty good. Is
That's pretty
is
good.
it higher or lower than that now?
I think it's a little bit higher since then. So the reality is you go through these times and it never feels good.
Yeah.
You never know. It always feels like it's the end of the world. I mean, to really bring it to the financial crisis, we thought the financial system was going to collapse at the time.
Absolutely.
You know, we showed up and every day the S&P was down 7%.
Yeah.
Every day.
Yeah. And more recently, for those who were with us more recently, which was during the COVID crisis, right?
100%.
30% loss in a month, in 35 days.
Yeah. The thing is with COVID is it was fast.
Yeah.
And we were just worried about really what this virus meant.
Yeah.
Right.
We had no idea what was going to happen.
What's happening now is really doesn't feel as bad. Right.
Yeah.
But it's been going down for about 6 months.
Yeah.
Right.
Yeah. And I think that's the big difference is, you know, I think here there's a disconnect between things are not that bad.
Yeah.
You know, we can argue obviously the war in Ukraine is a very negative thing, inflation and all that kind of stuff. But, you know, in March of 2020, it really did seem like we were in a Walking Dead kind of scenario.
Yeah.
Like you remember those pictures of like the aerial pictures of New York City with 0 people on the street. It was crazy.
Yep. And 100%.
Yeah. And people weren't banging our door down to buy Tesla at the time.
Yeah.
Right. But now they're going, oh, I wish I bought Tesla at that price, man. It would have been amazing or whatever. Or
it's never going to feel good.
Yeah.
I think you times like this, you have to lean on judgment. You have to lean on historical facts. You have to look at what other smart people are doing. I think someone said experience comes from good judgment, which comes from bad judgment. So you have to make mistakes.
Learn from mistakes.
Learn from those mistakes, and then that's what experience is.
One of my favorite quotes of all time is actually Thomas Edison. He said, "I've never failed. I've only learned how to not do something 9,999 times."
There you go. It's an experience, right? You learn from every one of your mistakes. And I think that's what we have as professional investors and investment advisors and financial advisors is we know what we do long-term works. Yeah. And we just have to manage our emotion on the short term.
Correct.
And I say that knowing that is the hardest thing to do.
Yeah. And when you say we, you actually mean we, because we're with you guys.
Yep.
We feel it too. You know, we're less prone to, you know, emotional decisions, but we also have the added negative part of having to look at this all day, every day. So we feel the emotion too. We're here with you. We're investing right alongside you guys.
Yep.
So I think what's important for us to talk about here is right. The show is called Future Money, and we do want to talk about investments and really sorting through this tech wreckage, right?
And we'll be remiss if we don't figure out how we're gonna make money out of this.
Absolutely.
I mean, this is one of the best opportunities I've seen in the last 2 or 3 years.
Yeah,
basically,
absolutely, right? Absolutely. So I also think it merits us talking about what is the difference between investing and what is the difference between speculating, right? I think what we've seen, and the reason this correction feels a lot worse, is a lot of people were very speculative. You know, we last year all we heard about was specs and GameStop and AMC and Robinhood trading and crypto and Dogecoin. Like, right? Where are all the Dogecoin people now?
Where does all the Robinhood people are?
Where's all that? Well, they're all gone, unfortunately, and so is a lot of the staff, unfortunately, at Robinhood.
Yeah, I have a friend of mine who's a trader for an investment bank, and he has their SPAC desk.
Yeah.
Guess what? I talked to him this last week. He has not done a deal all year.
I'm surprised. I'm glad your friend still has a job.
It's a legit investment bank. But what I'm saying is that, you know, there was a lot of froth in the market, and that froth created a lot of companies that went public that should not have gone public through these SPACs or just some of the IPOs.
Yeah.
And now what you're seeing is, and that's what speculation is, investing in things that don't have any fundamentals,
Yeah.
with the hope that they're going to go up because everyone else thinks they're going to go up.
Correct. And we saw it. And some of the stocks that we owned were a little bit more speculative.
Yeah.
We had ideas about companies. What's important during these times? So sometimes when markets are good, you could speculate a little bit.
Yep.
Okay. When markets are bad, you do not want to be speculating.
And that's such a good point that you just said right now. That's how you have to understand the macros, right? There is time for speculation and time for being disciplined.
Correct. And small speculation, to be clear, right? If you have a speculative part of your portfolio, it should be 1 to 5%.
Yeah.
Right. These are the times where you got to focus on quality. You got to focus on companies with good balance sheets.
Yeah.
That have been here for the long run, that have defendable businesses, that are not a flash in the pan, right? With the pandemic, we had all these stay-at-home stocks that were just darlings, right? Peloton, and again, full disclosure, we owned Peloton at one point.
We made money.
And we lost money at some point for some people too, but we sold it like, I don't know, 50, 60, 70% ago.
And this is why valuations matter. This is why you have to not just look at the price, not look at the growth rates. You have to look at the valuation in relationship to the growth of that company.
Yeah.
And I don't mean to get too technical, but at some point, everything reverts to the mean.
Correct.
And when you buy something that's too expensive, you can buy a great stock, but you buy it at the wrong time because it was just too expensive.
Yep.
So it's not the stock's fault that when you bought it, it was just
insane valuation for sure.
Exactly.
Yeah.
And even very, very adept investors make these mistakes. So it's the market is not going to care about you. The market is just going to care about what the market cares about, which is what the sentiment is.
Right. And this can be true for even the best companies, by the way, right? You look at a stock like Tesla, it's down 30%.
Yeah.
Right. Was it worth 1,200 right now? Is it worth 900? Is it worth 700? Like, if the market is going down, it doesn't matter how good your business is.
Yep.
It's going to take it with it. And if you're a high value, high PE stock, you're going to go down more.
So do we want to touch a little bit on interest rates and why this is happening, why we have this panic right now?
Yeah, let's talk about the very exciting. I bet you didn't think you were going to get this interest rate in depth. So we'll do it very quickly so that you don't fall asleep.
Yep.
So let's talk interest rates, right? We had COVID came in, right? So for those of you who don't remember where rates were in January of 2020, which was just a little over 2 years ago, because it seems like we've gone through 3 decades in the last 2 years.
I think 2.75 or
2% on the Fed funds rate.
2%.
Yeah. And guess where we're at right now? We're at 1% basically, and we're slated to be at 2 to 2.5 by the end of the year.
Yep.
Okay. So this is a renormalization of what was an basically free money, cheap money economy.
Yeah, we went through a crisis, pandemic, once in a lifetime, once in a generation event.
Yeah.
And the government has printed so much money and reduced interest rates to help stave not a recession, really a depression.
Yeah.
Right.
Absolutely.
And
America was shut down.
And you can argue, did we do too much stimulus? Did we spend too much money? I mean, that's a conversation we can have separately. But right now, what's happening is that we need to normalize this economy.
Correct.
And as interest rates being raised is going to slow down the amount of cash that exists in the economy.
Yep.
And that's really what the market is worried about, is how much liquidity is going to be taken out of the market, which is going to basically slow things down. And is it going to slow it down to a point where we're going to go into recession?
Yeah. And I think that's what everybody's worried about. You know, we personally are not in the recession camp.
Yeah.
But the economy is going to slow. And that's actually not a terrible thing, because if you want to go to
Europe because it's too expensive.
Dude, exactly. So this is what's happening. We have inflation. We had supply chain issues.
Mm-hmm.
So the market is renormalizing to where it was.
Yep.
So people just have to get used to that. And the second rates just chill out a little bit, because for those of you who don't know, rates bottomed out at about, I think, like 0.4%, the 10-year treasury during the depths of the pandemic.
Yep.
And now we're over 3%.
Yep.
So if you think of that move
Yep.
That is an historic move in rates.
It's almost a 10x move in 2 years.
And the quote safest investment asset that exists.
Yeah.
Right. So for those of you who don't know, when rates rise, bond prices fall. So you'll get, normally speaking, when stock market falls, the bond market offers us some kind of safety and makes us feel cuddly and warm usually. Well, that's not happening. Now our cuddly warm is really like filled with just like just killing us in the same way. The bond market is not doing what it's supposed to be doing.
Right.
So there's kind of been nowhere to hide, which is also why it's felt a little bit worse.
Yeah. Listen, a lot of financial engineering that happened, and this is why the Fed is so important. Yeah. That's why, what the Fed does is watched and listened to quite intently.
Yeah.
And frankly, it's why America is kind of the best financial system in the world, because we have a system that is responsible, that allows for legitimate management of currency and inflation. So the Fed has to deal with this. And there's a lot of, conspiracy theories about how the Fed doesn't know what they're doing and so forth. And I don't want to talk about that right now. But but the reality is Jerome Powell is trying to do his best to really reduce inflation, because at the end of the day, inflation is the biggest threat to our net worth, right? It erodes our purchasing power.
Correct.
And, you have the supply chain issues. You have China locking down, which by the way, I don't...
They're never gonna come out of this.
I don't get it, man.
They need real vaccines, real ones.
Can we buy some Moderna?
Yeah, please, somebody.
Come on. It's kind of crazy, right? Like, if this is the second biggest economy in the world and they're locking down cities with 10, 15, 20 million people just over
2
5
years
cases
after the fact.
Yeah, it's nuts. So now you got that. You got the awful things happening in Ukraine.
Yeah.
And oil prices going up. So there's a lot of dynamics kind of playing this out. And the market is trying to make sense of all of it.
Yeah. And honestly, like, the international markets, we constantly get scholarly advice of how undervalued international markets
for a reason.
I even remember one of the fund managers that came into our office back when people used to come into offices, and he kept saying for like the 8th year straight, he's like, well, our biggest idea this year is international and emerging markets. And I said, listen, if you come in here one more time and tell me how undervalued the emerging markets are, you're not going to come in here anymore.
Yeah.
Like, there's a reason why certain markets are higher value than others, because we're the best game in town right now. And that's the way it is. So
we do have the best companies, best managed companies,
for sure,
global companies, right? Yeah. When you invest in Apple, you're not just buying America, you're buying a company that operates in 100+ countries, and so most of their revenues comes from overseas.
I'd much rather buy Apple, who sells a lot of phones in China, and every quarter everyone goes, oh, because of China, Apple's going to suffer because their China numbers are definitely going to suffer. And then every quarter Apple blows out their China numbers, and everyone goes, well,
it's incredible how well Apple.
I don't like Tim Cook. Honestly, he's like the least exciting human being on earth, but he's the best. He might be the best operator of a business I've ever seen.
So not only that, I think he also is. He's the CEO that created the most shareholder value of anybody. Like, when Steve Jobs died, Apple's market cap was $4 billion. I mean, 400 billion.
No, yeah, he almost, I think he 10x'd the value of the company.
Think about that.
Yeah. I think it was 300 billion, and it got to 3 trillion, and then we're like, he 10x'd the company. And if you think about it, based on what? There's not really any new products if you think
incremental.
About it.
I mean, the Apple Watch, AirPods, they're incremental
stuff. But I was just having this conversation the other day. First of all, if you come to a meeting in our office, it's basically a commercial for Apple. Like, every product here is an Apple product.
Even though we're a financial firm.
Even though we're a financial firm. It's basically, I did a meeting for some of the younger guys here the other day, and I was like, this is an Apple commercial. Every single person had their iPhone on the desk with their MacBook Pro facing me. I was like, I was like, Tim Cook would be so happy right now.
No, the products are amazing, and obviously
they do such a great job and navigating supply chain issues and navigating.
I was thinking about that. Maybe that's what happened to our economy. Is it's about supply chain. Like, if you are a great supply chain manager, someone who can manage, because you're making hundreds of millions of something.
Yep.
Then you're gonna. But that's what Amazon is.
Yeah,
right?
well, guess who's not a great supply chain manager? Mr. New Amazon CEO.
Oh,
Mr.
poor
Jassy.
thing, man. He got a shit sandwich, you know.
Yeah,
Come on.
he inherited it. Jeff Bezos definitely went out on top. He's like, I'm leaving this behind and I'm going to hang out with Hollywood people.
Jeff Bezos is like that bond manager that retired in January.
For sure. Yeah. Or any manager that retired in January. He's like, I'm going to spend all my money on space and Hollywood productions. That's what I'm doing.
Hollywood is way more fun.
Yeah, exactly.
But
you know, again, I think so to kind of bring it all back, like this too will pass.
Yep.
You know, the analogy we like to use during these times is, you know, we're in a storm. We're in an airplane. There's a storm right now. The most important thing you can do is not panic and not hit the eject button.
Yeah.
We're going through the turbulence. Remember, if you've ever been on an airplane, and you've been on a really turbulent flight, it feels scary.
Yep.
Right? It feels pretty terrible. And then you inevitably you get through it and it's fine, and you don't remember the fact that you had turbulence on your flight to Hawaii
you don't try to open the door. That's for
you definitely don't try to open the door. And that's the real thing here. Okay. The most important function, you know, we're financial advisors here. One of the most important functions we serve as advisors is not what stocks we pick or what is handling the emotional part of money and preventing people from making emotional decisions during difficult times like this. So if you have a question, if you're scared, reach out to us, because this is really important.
Yep.
Because that's how you lock in a loss.
Yep.
Is by selling right now.
Yeah.
Okay?
You don't want to be the sucker that sold, you know, when in March of 2020, when the market rallied 70%.
And it happens. And nobody, there's always a few people who call you the week, the day, the market bottoms to sell everything. And then they get in 6 months later and then it's too late.
And that also doesn't mean that you want to just hang on to everything.
No.
If you're speculating, right? Like if you're owning,
absolutely,
you know, if you open Robinhood right now, I mean, that's not a stock that I want to own going into the next 12 months.
Definitely not.
Yeah.
So what kind of stocks do we want to own?
Quality, right? Like companies that actually produce some real products.
Yeah.
Some things that people want.
Yeah.
You know, hopefully they are making money.
Yeah.
So hopefully they have some kind of actual cash flow, some kind of positive cash flow.
Yeah.
Right. Also growing.
Yeah.
So hopefully they're showing some growth, and that will do well in the next, 12 to 24 months.
Yeah.
Recession or not.
Yeah. And companies with, so like I look at, we talked about Apple, Microsoft is another great example of this. Like these companies that just have solid growth, no matter what they, thick and thin, right? So they're not necessarily recession proof, but their businesses are long-term.
Yeah. You don't worry about owning those stocks going long-term. And at some point, Apple will stop growing and,
honestly, we said that I remember watching CNBC, which is now kind of a joke. But I literally remember watching CNBC. This was probably in 2013 or 14 when Apple hit the $500 billion valuation mark.
Yeah.
And they said no company has ever been able to crack the $500 billion for the long term. And that was 5x ago. And so it's like the 4-minute mile.
What they say, the first 500 billion is the hardest.
There's always the hardest. The next 5 billion, easy. It can be wiped away in a day or two. Also, but no, like it's important to note that these businesses will continue to grow. And Apple's the genius behind Apple is that I now pay for all these things, monthly subscriptions.
Yep.
All these random, like I honestly don't even know how much I pay Apple every month.
Yeah, that's the genius of it.
They're just like, keep feeding me things, but I'm paying monthly, so it feels like I'm getting a better deal.
Yeah. And no, their install base is so big. I mean, this company does $300 billion in revenue. So
it's crazy.
So you have, you have to make. I mean, you have to do 50 billion in growth to grow 20% or 15%.
And they've done that over the last year. That's the crazy part.
Yeah. So you own quality, and it doesn't have to be tech only, by the way.
Correct.
Like, the market is shifting, and this is what I was talking about. You got to swim with the tide, right? There is a move towards reopening trade, a move towards
commodities and industrials,
right? Like
industrials and materials, which would include commodities, were actually the biggest earning surprises in the S&P this quarter so far.
Yeah.
So I think we talked about valuation, we talked about all these things. So what does that actually mean? So the price to earnings ratio, right? What is the price of your stock or the markets versus what are the actual earnings that are coming in. The positive in all this, earnings are still going up.
Right.
Okay. Ultimately, the stock market trades on earnings. If earnings keep rising, markets keep rising over time.
Let me translate that. So you got to buy companies that actually make more money every year. That's where earnings are.
Yeah.
Right. It's just as simple as that.
Yeah.
Companies keep making money, stocks keep going up.
Yeah.
It's as simple as that. Right.
Yeah. And people go, well, I don't understand. Why does Apple make so much, go up so much, but Twitter doesn't? And they have such a huge base. Well, they have terrible financials. They give $1 billion in stock compensation to employees, and that's why Elon Musk takes them over.
That's exactly it. That's exactly it.
But so the S&P right now is trading at right around 18 price to earnings, which is right in line with where it has been historically over the last 5 to 10 years.
Right. But we know things never trade around their averages, right?
Exactly.
So it's probably on the cheaper side if I were to, especially with interest rates being this low.
Yeah. Exactly. So, people feel like, oh, interest rates are high. No, they're still pretty damn low historically.
And even with the 2 rate hikes that are happening, they're still going to be low.
Yeah, exactly. The market has to digest all of this.
Right.
It takes time.
And I think that's exactly the word is digesting.
Yeah.
Is there's a lot of information coming in, and then you kind of like you shoot first and then look. That's what's happening right now. People are just selling everything and then trying to figure out, which is frankly not the right strategy. That is not how you make money long term.
Yeah, and I think it bears because everyone goes, well, if you sold in January, it would have been great. No, nobody ever does that. And even if you do, selling at the top is hard. Buying at the bottom is even harder.
Right. And listen, you can get lucky.
I've
got lucky, we all do. And I wish I knew that we're gonna have this in January and I sold everything.
That would be amazing. But
that'd be amazing. But it's not a repeatable process.
I tell everybody, I go, if I could do that, the only person's money I'd be managing is my own. I'd be so rich that I would not need one client.
Yeah.
But that's the idea is you just can't do it. So what the market's returns happen on just a few days a year, really.
Right.
And if you since you can't time the bad days,
right.
If you miss the good days, you're done.
So to your point, it's really hard to believe, but the S&P is actually positive for the week. We had a minus 5% day today, but the S&P is positive for the week.
That is crazy.
It's crazy because we had a 3.5% up yesterday.
Remember when the market would move 1% and we're like, oh my God, the market moved 1%.
Yeah.
Now it's like 1% in 10 minutes.
It's exactly that.
It's the extreme volatility that happens around markets finding their bottom.
Yeah.
Again, if to go back to the the COVID crisis, remember there were multiple days in a row where the market was down 6, 7, 8% in a day in a row. And you're just like, dude, what is happening?
And that's, again, when you go through things, that's why they say hindsight 2020, right? When you go through things, you don't understand the gravity of it.
Right.
Like right now, what's happening doesn't make a ton of sense to me. There's just too much fear for really a process that is just normalization, that it's okay.
I think that's a great point. And we talk about sort of the contrarian indicators to the market. So when people feel the worst, that's generally the best buy signals. Yeah. Now, that's obviously, we don't know that that's going to be the case or where the market bottoms or whatever. But right now, the bearishness in the market is the lowest since March of 2008. Okay?
That's amazing.
Financial crisis, bottoming month.
Yep.
Second lowest, March of 2020 or April of 2020, the bottom of the COVID crisis.
Yep.
And the last one, the next one after that is December of 2018, which was the last bear market.
Yeah.
So I'm not saying that I can predict this, but that's pretty clear indication over the last 14 years where the market goes from the most bear sentiment. Now, is that 3 months from now? Is that 6 months from now or a year from now? That we don't know. So since we don't know, let's talk about some companies that we actually want to own. Let's talk about some companies that have gotten hurt that we're looking at.
Let's make some money.
Let's make some money for the future.
For the future. Yeah. So I think Shopify released their earnings today.
Yeah, that was not pretty.
It was brutal. 26% down. I think.
Did it end up 20?
I think so.
I remember when I got up and it was just a measly 15%.
Yeah, no, I think it got worse.
Yeah, well, this is what happens. So valuation. I love this company.
Yep.
Love them. But their valuation is still high. And the
even
market,
after today's
even
drop,
after today, the valuation, it's still 12 times sales.
Yep.
It still makes very little money.
Yeah.
Because
They lost money actually.
they lost money this quarter.
Yep.
But they made money the last several quarters.
Correct.
But
They bought a company,
logistics
2.2,
company,
yeah, logistics company.
Yeah.
It's a tough time, right? They do e-commerce. They have logistics business in a tough when we have some of the worst supply chain issues.
Correct.
They are very good operators though.
Yeah, absolutely. And again, when the time is right, so we talk about focusing on quality, focusing on good balance sheets, lower valuations. When the time is right, this is going to be a buy, a huge buy.
Yeah.
But that time is not now.
Yep.
This is what we call live to fight another day.
Yeah, and also this is what patience.
Yeah.
To be like, this is why Warren Buffett is such a successful investor. And I hate to go back to him, even though I don't like his investments right now. But you can learn a lot from his moves, right? He sat on cash for the last 2 years when the market was moving up, right? Because he just didn't like the valuations. And arguably he missed a bunch of stuff. But now he put $45 billion last quarter into the market because now he thinks things are cheaper.
Do you think he's buying Apple again? Because he was pissed that Apple went up too much and he couldn't buy anymore. So I wonder if he's buying more now.
It probably is.
Yeah. And that's the idea. And what does he have? 80% of his money is invested and 20% of his money is in cash.
Always.
To buy stuff when he
always has cash. Always has cash. So that's one thing, right? Is really having the ability to buy when things are tough.
Yeah.
And having really the emotional resolve to be able to deal with this stuff.
Correct.
Right? Like money is the most emotional thing that you can have, right? So you have to understand that you're buying businesses at different times, and these businesses will finally make money eventually for you.
Correct.
If you believe in them.
The question is, which ones are those? Right. You have to, number one, believe in them, but there's a fine line between believing and being delusional about the business. And I've talked to a lot of people over the last few months that bought all these tech darling, quote unquote, stocks that were COVID winners, your Pelotons and your DocuSigns and your, whatever other company that you could think about.
Like, I'm sure Luminar is going to be a great company one day.
Yeah. But that might be in 10 years. You know what I mean? So the market ultimately doesn't care.
I think they're going to make revenues in 5 years.
Yeah. That's what I love buying pre-revenue companies. They're like, oh, you really should buy. I remember this was at the beginning of last year when like all the froth was really going crazy when the GameStop.
Virgin Galactic.
Dude, you read my mind. Exactly. Virgin Galactic. And I remember having these conversations like, I got to own Virgin Galactic. And I'm like, why? Well, space flight is the next thing. I go, like 30 years from now. I go, maybe in a decade they have a chance to make some kind of money.
Yeah.
But the market obviously does not care about what happens 10 years from now.
Yeah.
It cares about what happens with 6 to 12 months from now.
And this is exactly what speculation is.
Yeah.
So
the company was trading at its high at $25 billion with $0 in revenue.
Yep. Yeah. And this is like, honestly, you got to blame Wall Street for this stuff because a lot of these companies should never have been allowed to go public.
SPACs, baby.
SPACs, no disclosures, So we're paying those the cost of that exuberance. Really.
Yeah, for sure.
So let's talk about companies that we really like that got beaten up.
Well, I want to talk about a company that I like now a lot more.
Yeah.
And that's Netflix.
All right. Let's go.
I mean, Netflix is a 17.
Have you watched the last season of Ozark yet?
I have not. I never really got into Ozarks. I always felt like it was just a less good Breaking Bad.
Yeah, I love
Is it good? It felt like it was too dark.
It's about a financial advisor that turned a drug a money launderer.
It was
great
like
story.
Slow and dark and physically dark, and I couldn't like actually get into it. But Netflix has a lot of shows. Stranger Things coming out in 2 weeks, 3 weeks, which I'm very excited about because I love that show.
Yeah.
But really, this is about a company that is now trading at a below market multiple price to earnings ratio.
Yep.
This is a marquee name. Now, whatever you feel about Netflix's content or Netflix's business practices, in Hollywood or whatever, it's hard to look at a company that has let's just say a market multiple.
Yeah.
That and not look at it and say, okay, at least it's intriguing right now.
Especially it's such a big brand.
Yeah.
I don't think anybody is going to get rid of their Netflix.
No, if anything, more people have to sign up because everybody's sharing passwords. Don't tell anybody. There are 4 households using my Netflix password. This is
I think we did a poll in the office, and 50% of our employees don't use
50% of them watch Netflix and don't have their own Netflix. So, and you're talking about a group of millennials, but for the most part,
who are very successful
millennials. But why would you? If I could share my password with 3 other people, why wouldn't I?
Yeah. So Netflix, huge brand, amazing operators. Reed Hastings, probably one of the most amazing CEOs that we've seen, and changed the whole media landscape.
Absolutely.
Changed the whole. And you can say, yes, they have competition, and HBO is doing some great stuff. Disney is doing some great stuff. And there is a lot more streaming than we ever believed in. But ultimately, this is a company that did $7 billion in revenue and $2 billion in profits last quarter.
Yeah. And people's biggest complaint about Netflix is they overpay for everything.
Right.
But they still did $2 billion in revenue, in earnings.
Yeah. I would plug Reed Hastings' book called No Rules Rules.
Yeah.
Probably one of the best business books I've read.
Yeah.
And it really goes down to how to manage creatives and how to allow people to make decisions and just really change the management structure of Hollywood. Right. And they stumbled. Right. They had a bad quarter.
And not the first time, by the way, that they've stumbled.
Totally. Yeah. And when you appreciate it in Reed Hastings is he changes his view. When you make a mistake, he realizes that he needs to change the way. And they're going to make adjustments. And that's a bet I am willing to make.
I agree with you, because one of the only things that I think is consistent across all the companies that we invest in is you bet on management. You bet on people.
Yeah.
And Reed Hastings is one of those people. I put him in the Jeff Bezos, Tim Cook, I don't know about, like, Elon is kind of
Elon look like Steve Jobs kind of level.
Elon and Steve Jobs are kind of in a class by themselves, but he really is one of the best at sort of vision in the company, and he doesn't lose.
Yeah,
that's the way I look at it. It's one of the reasons we invested so hard in Tesla is Elon Musk doesn't lose.
Right.
And so you bet on people. So at this valuation, if you're coming in from cash with new money, I mean, like, I feel like I like the stock here.
Yeah. No, I think I'm with you, man.
Yeah.
I'm with you.
One of my favorite companies, which we talk about all the time, which has gotten hammered, is Nvidia.
Oh, that's also
stock's down 40%.
I mean, it's got caught into the whole, tech wreck.
The AMD, or not AMD, sorry, the ARM acquisition didn't go through, which we knew was kind of a long shot. But I mean, my God, when you talk about a company with number one, Jensen Huang, the CEO, one of my favorite CEOs on earth.
Super low key, man. I love that guy.
He's like, he has Elon Musk ideas without Elon Musk.
Without
a holiness.
Yeah.
So I love this company. They're in every business I want to be in.
Yeah.
Right? AI, data centers, video games, crypto mining, all this stuff.
Cheapest I've seen at 30 forward PE.
The last time it had this PE was in I think December of 2018. And the stock rocket fire from there.
Yeah.
So again, it's futures, right? It's, if we look at 3 years from now, I'm going to look at buying Nvidia at $180 a share and go, man, that was a steal.
Yeah.
But I don't know if it's a steal between now and 3 months from now.
And that's kind of what you have to know as an investor is you're not going to be able to time the bottom.
Nope.
You may get lucky. So don't put all your chips in, buy a little. Wait a little bit, buy some more, see where things are going, and at some point things will turn.
Totally.
Something happens in China tomorrow, this market can take off.
Yeah, I mean, I'm telling you, when I bought Nvidia in March of 2020, I had no idea that was the bottom.
Yeah.
But I bought a little bit here, a little bit there, a little bit there, and eventually it churns.
Yeah.
You just have to have that longer mindset. You have to, just divorce yourself from your account value. I tell my clients this all the time. I haven't looked at my account in 3 months. I don't know what the value is, and I don't care at this point because those holdings I'm going to keep them forever.
Yeah.
So
that's really the mindset is you gotta think forever. Is this a stock going to hold forever? Right? Is this, and things change, information change. Shopify, some stuff happened with them. You may want to go in and sell a little bit because you want to take some losses or whatever. But ultimately, you can always get back in.
Live to fight another day. That's my motto for 2022.
Yeah.
It's you can you could be a hero and die on the battlefield, or you could just run away if the army is attacking, and you live to fight another day and ultimately come back when it's a better time.
Right.
Right.
Any other companies that we like?
Well, let's talk about the one you love, which is Unity. And again, this is a valuation question, right?
Yeah, it's a great. I mean, if you think about entertainment, gaming is the fastest growing aspect of entertainment.
Yeah.
And Unity is the game engine, is the place you go to make games. Without them, there is no games, right? Mm-hmm. And then also you think about AI processing, you think about, VR, AR, and so forth. So they are right there, but they are also an expensive stock, right?
Yeah.
So they got caught, and, stock was trading 180, is trading, I think, 65 or 70 right now.
Yeah.
I love the company. I love the business. Is it the time to own it right now? I don't think so.
Yeah, it's not the best time for these companies, and I actually blame Facebook for this, because of this whole metaverse. When's the last time you heard somebody talking about the metaverse? Now it's that was
we did a show by the metaverse.
Yeah, our first show, that was the buzzword of the end of 2021.
Yeah,
but the metaverse is it's a multi-year stage. And so I think stocks like Unity ultimately will be amazing stocks. But again, like you said, it's a valuation issue.
Yep.
When it comes down, when markets normalize, when rates normalize, this might be a stock too that I want to own for the next 5 years. Probably, I'm not gonna say absolutely, but most likely yes.
Yeah.
But we just have to kind of sit on our hands a little bit right now.
Yeah. And if you have the stomach for it, there is no reason for you to go buy a little bit if you don't own it.
Right.
If there is no reason for you to not buy a little in times when the market is on 25%.
Yeah. Once again, if your viewpoint is 5 years from now, that's the way to look at it.
Right.
What we know about a lot of people is that they might say they have the stomach for it, but when you lose 50% or 60% on a stock, it changes your viewpoint. It tests your resolve. And that's ultimately what this
Everyone is aggressive when the market is going up.
100%. And now everybody's conservative. Now everyone, I mean, how many clients are banging on your door for you to buy aggressively right now?
I have actually some smart clients who started saying, hey, listen,
I'm sure you have a ton of smart clients.
Yeah, I do have a lot of smart clients. And someone asked me to buy Apple today.
Why wouldn't you? It's, Apple's down 7% today. Yeah. I tell one of my clients this today. I go, is Apple 7% worse today than it was yesterday?
Yeah.
What is the point here?
I think America is 7% worse.
America is 7% worse today, and it's 15% worse than it was on January 1st.
Yeah, exactly.
And this is the thing, guys. Markets on the short term are going to be crazy. Crazy to the upside, crazy to the downside. Just tune it out. It's all white noise.
Yeah. And that's the reality. Just you just got to tune out the noise, and there's a lot of it right now.
Yeah.
And listen, it's we recognize there is no positive headlines right now.
Yeah.
All you hear is inflation, rates going up, houses the most expensive they've ever been, home affordability is the worst it's ever been. China is locking down, Ukraine, Europe. There's a lot of negative headlines, and it's tough to change the sentiment when you have that much bad news.
You need a catalyst. You need something.
Yeah.
Okay. So what is that catalyst? What I always tell this also, like, what you don't hear on the news is S&P earnings up 7%. 10 if you don't count Amazon, which is a stock we should talk about also.
Yeah.
Amazon had a huge miss in earnings, mostly because they have the stake in Rivian.
Hold on, you said tech earnings up what?
Well, tech, so Amazon's technically not tech. It's consumer discretionary.
Sure.
But the information technology sector of the S&P 500, earnings were earnings beats and upside. 82% of the companies reported an upside beat.
Yeah.
And then 90% on the revenue side. The number one revenue beating sector of the S&P 500 was tech.
Holy shit.
Okay. So let's keep things in perspective. Now, if you X out Amazon from the S&P earnings, we're actually up 10% because most of Amazon's losses were actually on this BS Rivian stake.
Right.
Because Rivian went from 150 to
40.
30, 40. Amazon had to take
I think Rivian was up today.
No way. No way. Prove it.
Prove it. Show me.
That Amazon had to take a huge write down. The way accounting works is they have to take a huge write down on their books because of this Rivian stake. Nonsense, really. But if you X that out,
and boom, I'm wrong.
Of course you're right. Come on, man. There's no chance Rivian would be up today. And so the market earnings are up 10%.
Yeah.
That's not a headline you hear about. Have you heard anybody say that?
No, it's just, and listen again, it's a beaten down sector that is done the best. And the reality is it's done the best last year. So now what's done best last year is doing worse this year. And that's
correct.
Kind of the cyclicality of the market.
Correct.
So
exactly
how money flows or where money moves,
Right. So for those of you who remember the .com bubble burst, okay, a lot of people are worried about this. Oh, is this the next .com thing that we're going through? Well, what you need to understand, so once again, let's go back to valuations and PE ratios. During the top of the NASDAQ bubble in 2000, the NASDAQ PE was 100.
Shit.
Okay?
Yeah.
100. Today, the NASDAQ PE is 20.
Yep.
Okay? So to put that in perspective, let's call it the NASDAQ is around 12,000 today. We would have to be at 60,000 on the NASDAQ to have the same level of froth that we had back then. You got that? 60,000.
That's amazing. It's amazing when you put it in those terms.
Okay, so we were slightly overvalued on the NASDAQ, on the S&P, and now
how old were we going to be when the NASDAQ is going to be at 60,000?
I'm gonna go out on a limb and say I'm gonna be 55.
55. Okay.
Yeah, 15 years from now, the NASDAQ will be at 60,000.
Okay, that's actually a good bet. I'll take that bet.
Hopefully, I'll still be alive to make that.
I think you'll be alive.
So that's the idea, right? Like, we didn't. There will always be periods where high value, so high growth stocks like tech stocks, NASDAQ stocks, they're going to be more volatile. You can't have upside volatility without downside volatility also.
Yeah.
It's just the way it works. So you'll have a correction and a redistribution of different investments. Oil is the only thing that's up this year. If you look over 10 years, oil has basically earned 3% a year, which is essentially the dividend.
Yeah.
Right? And that's it.
Yeah. And so I think that's one sector we don't invest in, which is oil. And we don't invest because I think cyclically it's not a place that's going to do well because of global warming. But ultimately, it's the best returning sector this year because of all the stuff that's going on. Is that something you want to own for the next 5 years?
And the worst returning sector in the last 10 years.
Exactly. It was dead money for 10 years. Yeah.
So we're hyper focused on today, on what's happening now. But this is the time, this is the best thing for green energy. This is the best thing for climate change that could happen. I was listening to a podcast the other day and they had a climate scientist on it and they were talking to him and they asked him, what's going to get people to actually adopt green energy for the good of the climate?
$6 oil.
And the answer was greed.
Greed. Yeah, no.
Greed is the only answer. We all like to think that the world is this beautiful place where, we want to do good for the good of Mother Earth and the people. And ultimately it's about money. And solar right now is actually the cheapest form of energy.
Yeah, I know. I have solar in my house.
Right? And that's what changes the game.
Yep.
Is now. My brother, who drives a combustion car, he's like, I want to buy a Tesla, but it's too expensive. Now he's looking at his car and the fact that he pays $300 to $400 a month in gas. You heard me right.
Yeah.
And he goes, now it makes sense to buy a Tesla.
Totally. I mean, if you add that to your car payment, right? Think about that.
Why wouldn't you? You know, you save $300 or $250 a month by not having to fill up your gas tank.
Right. Wow, that's a lot of
So
stuff.
green energy also got hit hard.
Yeah.
It has gotten beaten down over the last year. You know, with stocks like Solar Edge, stocks like Enphase.
Yeah.
Like these are great companies.
Yeah.
And over the next 5 to 10 years, these are game changers, right?
100%. And you think in commodities like lithium and anything that you use to make batteries,
correct,
and electric batteries. I think that's really where we're going. We talk about this a lot, but you know, these are the opportunities that you get, you are given, and you have to tip your toes and just, you know, look at where the world is going, basically.
Yeah. And just, you know, just steal your emotions in these times, guys. It feels bad when you're in it, but in 2 years, you're not going to remember this.
There is also, you know, it's some, I think this is an evolutionary thing where
100%.
you never remember the bad times. You know, I think we are emotionally, and evolution has made us where we only, after we get through these times, we don't really remember them. They just like, you know, we focus on the good time, which is really good.
Yeah.
So,
well, a lot of people will focus on very negative things, but again, COVID, I ask a lot of my clients this, what correction do you remember? And you can't say COVID because that was a very unique time in our history. And the last one they came up with was 2008.
Yeah.
Okay.
Even though we had
one in 2018, we didn't have a bear market, but we had an 18% drawdown between 14 and 16.
Yeah.
And then we had one in 2011, which was a 20%. Nobody remembered those.
Yep.
So once again, we're going to leave you with this. This is called future money. This is investing for the future. All of our investments are for the long term. You're not, hopefully, if you're buying investments for technology in the future, you're not using this money tomorrow.
Yep.
So keep your eye on the prize. Keep your eye on the long term. This is how money is made. And ultimately, you're going to be fine.
Yeah. And also focus on your family, focus on, you know, it's very emotional to see the losses, but ultimately, you know, we're coming out of a pandemic. We're doing things. We're seeing our friends. We're going out. We're celebrating marriages. And, you know, I don't know. I went to a 16-year-old birthday party last year. That was awesome.
Yeah.
Like, you know, we're, you know, focus on the good times, because that's really what matters at the end of the day.
For sure.
You know, and just let this ride.
The storm will pass.
Storm will definitely pass.
Yeah. Awesome. All right. Well,
thank you for listening in. If you're looking for a shoulder to cry on, or, you know, for someone to, you know, be a partner in this journey, because, you know, that's kind of what we do is really being your partner in this journey. That is, you know, being your pilot, right, through this turbulence. So you can reach out to us. We're happy to, you know, we don't have all the answers. We don't pretend to, but we know how to ride these planes, and we will get you there. We get you to that destiny. So you just have to reach out, and it's not us. You should have someone else that you can talk to, that you can really talk off the ledge, because that's what we need in these times.
Yeah, absolutely.
And then also you got to control your blood alcohol level. You know,
well, it is Cinco de Mayo. So
cheers to.
This is one where, you know, I don't know when this will come out. Not in Cinco de Mayo, but currently it is.
Yeah.
So
we're go have some tequila.
Go have some tequila. Have some Modelos and Coronas, and everything will be fine, guys. Enjoy yourselves. This is Future Money. We'll see you next time.
Stay strong. Cheers.